A lot of people think you need to own the real estate in order to make the money. But what I've found is that the lender, the person who's being the bank, is the one who often makes more money. So in order to make money in real estate, you don't need to own anything, but you need to be your own banker. Let me show you a little bit more about what I mean. How many of you can relate? You need money to make money. Without money, you can't buy the deal. You can't do the marketing. You can't hire the staff. You can't do anything. So, are you on that side? Good. So let's talk about it. You're the borrower. Where do you go when you need money? Well, we've all been taught our entire lives that we go to the banks. We walk in there, we grab our dumb suckers, we enjoy that sucker while they're making a deposit. And does the bank actually take our money and put it in the safe, in the vault? No. The bank actually moves our money. The bank makes our money that we worked for go to work for them because we allow that. And then when we need money, what do? We go back to the bank and they give us our money and everybody else's money pooled together, and they give it to us and they charge us an interest rate. But how much is the interest rate they charge? Well, it depends on the timing and where prime and all those things are, but cut that. It's more than what you make. If the bank pays you 1, which you'd be fortunate to make 1 right now, they're charging you 6 or 7. In the middle is a spread. Brilliant. And how much risk does a bank take to make that spread? Not much. It's not even the bank's money, it's our money that we gave them to hold on to. Then they make our money go to work, and what they do is they take collateral every single time. Unless it's a debt consolidation loan, an uncollateralized loan, but those rates are through the roof. Right now, more than double digits. I mean, think of a credit card, 20 to 29%, because it's unsecured debt. And they charge a bloody fortune for that. So if you really think about it, banks are cleaning house. They're making a ton of money making a spread because there's a lot of people like you and me that need money to make more money. But we carry all the risk, not the bank. If we screw up and don't make payments, what happens? Well, our credit score gets dinged. They take the asset, whether it's a car, a boat, a piece of real estate that you're flipping or renting, whatever the asset is, they just come in and they take it. Well, that's what they should do, right? If you're not going to be a good steward of the bank's money, then why shouldn't the bank take what you put up for collateral? Makes logical sense. But the whole time the bank was lending that money, they knew what their spread was. In that spread lies the opportunity that mentor taught me. The ultimate in real estate is being the bank. It's the spread. It's not going to change that you aren't going to need money. So let's talk about what it is you need to do to get the money you need. Well, you can go into the bank, but when the bank says no because the markets are going straight down and banks are seizing up and tightening up, you're not going to get money from banks. Oh, and also if you don't fit the little square box that the bank wants you to fit, your debt to income ratios aren't right, your credit scores aren't right, your income, well, it's not in the right place. You're not a W-2 employee, you make 1099 income, banks don't like that. All that crap. Chances are you're gonna have to seek money elsewhere. And where do you land? Well, you go online and you say, I need money for real estate. Where do you go? Institutions, hard money lenders. Now, there's a big difference between hard money and private money, but most of you don't quite understand that yet. So let's just define hard money. Hard money isn't hard to get. Hard money is institutions, okay? It's either a group of investors that come together, or it's an institution that raises money on the outside through a private fund, and then they lend that money out. They do what a bank does. You see, they mimic what a bank does every day, just like you should do. And they charge a much higher interest rate because they're not a bank, and they're taking on more risk, they're lending a higher percentage, and they're going out there and lending to you because you didn't qualify for bank financing, and you need the money quick, right? Isn't that a key thing? I need my money now. So you land it hard money lending. Now, hard money is not fun. Number one, it's really expensive. There's fees left, right, and center. Not only is there fees left, right, and center, they want a ton of information just like the bank. You thought this was going to be easy, and you get into the process, time's a ticking, tick, tock, tick, tock. Your deal's going to end, and you don't have the money, so you're really in a tough place. The hard money lender is in control. But then somewhere along your journey, you meet a neighbor, a coworker, a friend, a family. You tell them about this experience. You tell them about these awesome deals that you're finding and how all you wish you had was a couple $1 million or money to fund these deals. And Your neighbor, coworker, friend sits there and says, well, I got a little bit of money. What if I lent you the money? Now, all of a sudden, what they're talking about is being a private lender. And you being the borrower think to yourself, well, yeah, that would be great. And now opens up a whole new dimension, a whole new world. It's kind of like you just arrived in the Matrix. You have a choice, red pill or blue pill. Which is it going to be? Do you want to go back to the old way? Or do you want to open up this new matrix of working with people that actually care about you, people that actually want you to succeed, and people that actually want to build a relationship? That's right, because private lenders are just like you and me. They're not institutions. Nope. They're just folks that have a little bit of money, whether it is home equity lines of credit, maybe the equity in their house, maybe they've saved up a little money in their savings account and they're sick of losing money to inflation, or maybe they had an old job that had a 401k that they roll over into a self-directed IRA and they're just saying, you know what, I got to get this money making something. So, hey, your deal looks pretty good. So we're going to define this today. We're going to go over the pros and cons of private lending, but we're really going to focus on the 5 things that one must do. I don't care if you're a borrower or a lender, private lender that is, there's 5 things that you must really be aware of going into this. And then once you do that, there's a whole bunch more. So let's uncover that. Going back, we need 2 parties, right? We need people that need money. That's some of you. You need money to make money. You need money for that new deal. All right, great. But unfortunately, that money that you need, you don't have. But you got the opportunity. And some mentor or guru or YouTube video or Instagram or TikTok person said,
it's all about the deal. If you got the deal, the money will come.
And you're sitting there saying,
all right, money, come, show up. Please let the money show up in my account. Please let the money show up in my account.
And then you realize that you actually have to go out and do something to find that money. That brings me to the other side. The people that have the money. The other private lenders. I don't care who they are, but they've got the money. And you know what they're thinking? They're like, I got all this money that I worked really hard for. I don't want to put it in the stock market because I'm worried about it going down, which it definitely is going to go a lot lower. So what do? I can just leave this money in the bank, but the bank's not paying me anything. The bank's making this giant spread and I'm making nothing. And then they remember one of those YouTube videos or TikTok videos or Instagram videos where somebody said, you know what? The ultimate in real estate is being the bank. Own nothing but control everything. Go out there and make interest rates on your money just like the bank does. And they start thinking about it. All right, well, I wonder where I could find one of those people that needs money. And lo and behold, they find you. Or maybe they don't. One of the 2 things has to happen. You need to know them, you need to like them, or you need to be introduced to them. And that seems easy enough, but in today's world, it's pretty tough. So we gotta find a way to connect the people with money with the people that need money. And I don't care if you got money, your problem is you want to make more of it, right? Am I wrong? All you want your money to do is make more. Great. Now we've got the recipe for perfection. And now we've got the makeup of how I came up with a community, a software platform called Private Money Club. Because you know what? I used to need money, and now I have money, but I want to make more money. And to make more money, I just got to go back to people like me, or like I used to be, that need money. Holy crap, that's a dating site. The first thing you need is a place to go. A place, a dating site, a community where you can actually go and meet people and you can look through deals, or you can look through private lenders. You can read profiles of what they want, 10, 12%, maybe they want 15, and you can kind of look through and see how this whole thing's done. Because we learn by doing. And we learn by seeing how other people are doing it. So you can't just walk into a bank and say,
hey, Mr. Vice President Banker, can you walk me in the back office and show me how you do all of this? Like how you track all this?
No, they're not gonna take you back there and show you their secrets. That's the bank's job, right? They don't want you learning how to be the bank. So you come to a community like Private Money Club. And the first thing that you needed to figure out is, what are all these people doing? And the second thing you need to do is you need to start building some relationships. Send some emails, maybe shoot some texts out, maybe just say, hey, I noticed you on this site, and I was just wondering, what is it that you're looking for? And if their profile didn't say it, they will email back and say, yeah, I'm looking to move some money. I got some money just sitting on the sidelines, and I'm looking to make 12 to 15% or whatever the rate is. And you're like, hey, I'm looking for someone just like you. I've got this great opportunity. I'm definitely willing to pay 12 to 15%. So let's chat. Wow, that was simple, wasn't it? Well, that's the whole idea. Money isn't complicated, but money does have its own language. And the beautiful part is, I speak that language. Private Money Club speaks that language. You just need to learn the language. So that's the first step, community, relationships, and building it. The second thing is once you both get together and you form this relationship and you're communicating, well, you need to come up with the terms of the agreement. So you might have the deal and somebody else might have the money. So we need the money to make it into the deal or the deal never happens, right? So what we need to do is talk terms. So step number 2, we're gonna need a note. That's right, a promissory note. Because you as the borrower needs to borrow money from this person. This person has some set terms they want. I want 12% on my money. I don't want to lend it out for longer than 12 months. I want to be in a first secured position, meaning just like your mortgage, the bank's first. You don't pay them, they take your house. Well, that lender, that private lender wants to be in first position. So the terms that you're going to come up with, which is the interest rate that's going to be paid, how the deal is going to be structured, maybe it's a joint venture, maybe it's just a lending deal, how long the money is going to go out, what happens if you go beyond that time frame, is there an extension, or now do you have to pay more, now are you in trouble? All the terms, all take place in the note. So if you don't have a note, you don't know what it is, why don't you just Google it? Or call an attorney in your neighborhood that specializes in real estate and ask them to show you a note and then figure out what you want. Let's move on. The next step. The next step is once you got the terms figured out, what we need to then establish are some rules. Okay, some basic rules. And the rules are going to be simple. Number 1, I have the money and you need the money. But I'm not going to just send the money to you because that's too risky. I'm going to send the money to a third party. So, hey, folks, can you hang on to this for me? You are the third party escrow agent. Normally, that's going to be a title company or an attorney. Depending on the deal, let's just call it an attorney because you all understand what a lawyer is and an attorney. They have an escrow, and they will hold the money and facilitate the deal. So now the lender and you, the borrower, have established your relationship, you've established your terms, you've got your note signed. Now the lender sends the money to a third-party escrow. The money never goes directly to the borrower until the deal is closed and the security is signed. So now we've got the money sitting there. So you as the borrower now feel really good because now you know your deal can close because the money's right there. But there's a couple other things that need to happen. We need to get the security in place. So you've got this great piece of real estate that's gonna be worth X amount of dollars after you renovate it and do all the stuff you're gonna do, or rent it out, I don't care, whatever you're gonna do. Great, but the lender maybe doesn't feel super confident that you're going to be able to fulfill on that duty. So the lender says, you know what? Banks get collateral. Hey, Mr. Borrower, I need some collateral. I need some security for that money that's sitting in escrow, and that would be called a mortgage. That's right, if it's a piece of real estate, it's a mortgage, maybe it's a lien, a deed, there's a whole bunch of names, deed of trust, but we're just gonna call it a mortgage for all intents and purposes, because all of you can understand that. What is a mortgage? Well, a mortgage is structured usually by a title company or an attorney, and it's a security instrument that is filed at the closing. So let me walk you through that. Lender sent the money to a third-party escrow. You gave the terms and the note and all that stuff, and you signed. Now there's one other form you're gonna sign. We're close to closing. You are so excited because you're gonna close on this deal and you're gonna go start working on it. But before you do that, you gotta sign at closing, usually, or the day before, a whole bunch of paperwork, a mortgage. And that mortgage is binding that deal and you to this money. Meaning, we're gonna give you this money, but you're giving collateral of this deal. And if you don't pay that lender as per the agreed upon note, well then that lender then now can put you into foreclosure and then risk your deal, take your deal, make things very difficult for you depending on what the note says. That's right. That is the single most important thing for the lender because that's security. The lender comes to you and says, you know what, hey, listen, if something bad happened, like a tornado or, there was just that hurricane that wiped all these properties out, how are you gonna pay me back? And you, the borrower, says, oh, well, I have insurance on the property. So the lender goes to you and says, yeah, but that insurance doesn't list my name, does it? So the lender then wants you to get an insurance policy naming the lender as additionally insured. You know how this works? Your car insurance. Who's named additionally insured on there? Oh, that's right, the bank. Whoever lent the money on that, right? Okay, when you took out your house, You have a homeowner's or you have an insurance policy on that house. Who's named additionally insured? That's right, the mortgage holder, the bank. Well, the lender wants to be the bank, so you need to provide the same things to them. Get an insurance policy, put them on additionally insured, make sure that it covers them for the proper things. So now you can see what documents we've got. We've got a note, the terms that only the borrower signs in most cases. Then we got a mortgage that the attorney drafts up and records at closing to make sure that that lender is in a first or whatever position, but I like first position on that piece of real estate or that asset, okay? Next, we wanna make sure that it's insured, naming the lender additionally insured. Okay. So now you've got a whole bunch of action steps. You're feeling pretty good about this. And Private Money Club can help you kind of put all this stuff into place. There's a whole bunch of education and on-demand stuff that will walk you through this stuff. We call it best practices. And each one of these little steps is one additional thing that the lender or the borrower has to do. But there's nothing complicated about this. Now I want to talk about some ground rules real quick, because we talked about rules, but let's just hit some things. The borrower must be an entity. So if it's just you, Joe, whatever your name is, if it's just you and you're trying to borrow personally from this lender, no bueno. You can't do that. Okay, there was rules put in place in 2008 and 9 and all sorts of other times that prohibits that. This is a non-owner occupied piece of real estate. You got to be an entity. You got to be an LLC, an S Corp, a C Corp, whatever entity it is, not a sole proprietor. So if you're not an entity, well, come on, hurry up. Oh, that's all right. On Private Money Club, there will be a section where you can go through a preferred providers list and you can get an entity set up tomorrow. So you got to get that entity already, because the borrower needs to be a company or an entity so that the lender can actually lend to the proper company. There we go. We got that out of the way. Borrowers, don't ever ask the lender to send the money to you. I don't care what your circumstance is. That is not good practices. There's always a third party escrow agent. Remember, I gave you the money to hang on to until this transaction happened. Great. The other thing too, and this is just a little bit of due diligence stuff that's really important. When I look at a borrower, the deal, yeah, I want the deal to be good. I want the location to be good. I want to make sure that the numbers make sense. I want to make sure that there's multiple exit strategies. Oh, you're going to renovate it and flip it. Great. What happens when all the real estate in the country drops because we're deep into a recession? What's plan B?
Oh, I never thought about that.
Boom, you're done, I'm not lending. But if you then say, well, if that happens, I will rent this out, and then I will basically be able to make payments to you, and then I'll go to a bank or another institutional lender, and I'll take out money. And then I, being the lender, go to you and say, well, what if you can't? What if they all seize up and they won't lend to you? What's your next thing? Well, worst case scenario, I could go to Uncle Phil, who's got a bunch of money, and I could then say, hey, I finished this deal, it's cash flowing, would you lend the money so I can buy out my original lender? Now I've got plan A, plan B, plan C. I'm feeling a lot better as the bank, right? When I'm looking at borrowers, I'm really doing my underwriting, my due diligence on the person. The property is important because if all goes bad, I want a nice piece of property to take. But I'm really lending to you. I'm lending to the borrower, so I'm gonna underwrite you. And you know what I'm gonna ask you? I wanna see what's behind the curtain. Can you give me a personal financial statement? I wanna know all your assets, and I want you to show me proof of those assets. Yeah, statements. And then I wanna know all your liabilities. Who do you owe money to? You got a car loan? Great. One for your wife too? Oh, you got a car loan for your kids too? All right. College loans? Are you on the hook for those? You got a mortgage? Great. Who do you owe and how much? And at the end, I'm gonna take all your assets, I'm gonna subtract your liabilities, and that's gonna tell me how much money you got left or don't. And if you don't, well, game over. Then I'm gonna look at your income. How much income do you have? Do you have more than one income source? Because if this deal goes longer, doesn't go as well as planned, how am I gonna get paid? These are the things I'm gonna ask for from you. So I know some of you are thinking, oh, this Private Money Club thing sounds great. Well, it is. It's privatemoneyclub.com if you wanted to check it out. You can click that down below, or after you're done, type it in there. You're probably thinking to yourself, well, man, I've never done a deal. I want to do this, but maybe Private Money Club's not good for newbies. Wrong. it's actually phenomenal for newbies. Because here's what a lot of new real estate investors are doing in Private Money Club. They're coming in there and they're looking at all the really experienced borrowers. The other people posting deals and they're taking notes. Okay, you did this in the description, those photos look great, attached an inspection report, attached an appraisal. They're taking notes. They're learning by seeing other people do. And then what they do is, if you're really smart and you're brand new, maybe you message one of those experienced borrowers on there. Hey, I'm brand new to Private Money Club. I'm a new investor. I don't have any deals under my belt. Would you give me any suggestions? Or if I find a really good deal, would you be willing to do that deal with me? Would you be willing to joint venture? Now, you're gonna have to be flexible in the terms because the experience is gonna trump your ability to find the deal. But if you find a really good one, you could build relationships and maybe joint venture. And that other borrower on Private Money Club might already have relationships with some of the existing lenders. So now all of a sudden, what you've done is you've leapfrogged years. Now what you've done is you found somebody that's credible, somebody that's been doing this, and somebody that has existing relationships that now you can just piggyback on. You see that? So if you think just because you're new, just because you don't have any deals under your belt, this isn't gonna work for you, you have a lot to learn about life. And that is, you need to be more consistent and persistent in your actions. And you need to learn that it's not about your actual resources. It's about how resourceful you can be. Private Money Club provides a community of people that can help you get there. So if that's you, giddy up and go. And stop thinking that cost is the issue. Cost is never the issue. Cost is never an issue in the absence of value, period. So what's the value that you seek? Hey, if you haven't gotten started with Private Money Club yet, it's totally free. Just go to privatemoneyclub.com, get registered, create a profile, and dive into the community. And also, if you want to learn more about how private lending and Private Money Club work with infinite banking concepts, just watch some more videos like this one right here.